Ladies and gentlemen, federal employees, today we're talking about what happens to your life savings, your TSP, if you die. What happens if your spouse gets it? What happens if a non-spouse gets it? And who has to pay all those taxes that have been building up in your TSP? Today we're going to dive into all of this. And if you're new here, welcome. So good to have you. My name is Dallin Hawes. I'm a financial planner who serves federal employees every single day, and I absolutely love it. So let's dive into today. Here's the deal. When you die, your TSP, your life savings, goes to whoever the beneficiary is, period, end of story. So for example, this has happened. This story has happened many times over. Let's say you're married. Everything's good. However, 10 years in, you get divorced. And while you were married, you put that spouse as your TSP beneficiary. 5 years later, you get remarried, but you just forget to update your beneficiary. You've got a will, you've got a trust, and in the will, the trust, all those things, you have your new spouse in there to get everything, okay? 20 years later, you pass away. Who gets your TSP? Your TSP, in this example, would go straight, no questions asked, to your ex-spouse. To your ex-spouse. Whoever the beneficiary is, gets your TSP, no questions asked, every single time. This has gone up to the Supreme Court multiple times. Whoever the beneficiary is, even if it's not who you want to get it, is going to get it. Okay? So here's the moral of the story. Make sure your beneficiary on your TSP account is who you want it to be, and review it every year or so, just in case maybe you had a new kid, some grandkids, maybe you got divorced, you got married, whatever. You want to make sure you review it, because that's all your hard-earned money, your life savings, going to potentially someone you don't want it to go to. Okay? That's more or less story number one. Make sure your beneficiary is up to date. Okay, here's the deal. Now let's say you do have your beneficiary up to date and it goes to the person that you want it to. What happens then? Are they saddled with all those taxes? How does that work? Well, let's talk about it. If your spouse is the one to inherit it, let's say you pass before your spouse so that your spouse gets it, your spouse can choose, if they'd like to keep the money in the TSP. Okay? They can choose to keep the money in the TSP if they want to. They don't have to. They can move it out to their own IRA. It doesn't matter. Okay? They can have the choice. And it's up to them. There's pros and cons between TSP, IRA. It's up to them. They have the choice. Okay? And they don't have to pay taxes on anything unless they make the withdrawals. Okay, just like you, when you take money out of the TSP, your own TSP account, if it's the traditional TSP, you've got to pay taxes. And it's going to be the exact same way for your spouse. It's going to be as if that was their money. There's no really special rules. It's their money now. They spend it. When they take the money out of the traditional TSP, they pay the taxes then. Nothing too crazy. Just like you would have taken it out, they take it out, they pay the taxes then. If you gave them, of course, any Roth TSP, that money comes out tax-free. That's great as well. Okay? So, again, a spouse can stay in the TSP if they want, or they can go to an IRA. They can take the money out whenever. They pay taxes on traditional TSP withdrawals whenever they make them. Okay? Just as if it was you. Okay? Now, let's talk about a non-spouse. So anybody else, whether it's a kid, grandkid, niece, nephew, friend, whatever, anyone else that's a non-spouse, they cannot, I repeat, they cannot stay in the TSP. They've got to get it out. They've got to move it to what they call an inherited IRA. Okay? Now, you don't have to move it to an inherited IRA. You can just take the money out and pay all the taxes and penalties and everything right then if you wanted to, right? But most people just move it to an inherited IRA. And when they move it, so let's say they move it from the TSP to an inherited IRA, that movement has no tax implications. Zero. You don't pay any taxes making this move, okay? They get the money, it goes to their inherited IRA, okay? And there's no tax implications in that move. However, once it's here, once it's in an inherited IRA, that is when they pull money out of that account, that is when they have to pay taxes, assuming it's the traditional TSP. Again, if they inherit a Roth TSP or Roth money at all, that money can come out tax-free whenever. That's great. We love that type of money, okay? However, of course, a traditional TSP they inherit, any withdrawals from that, even when it goes to an inherited IRA, they got to pay taxes on it. However, here's the big difference. For a non-spouse, there's rules on when and how you have to take money out of the inherited IRA. And I'm not going to go into details, and the rules have always been changing on this, but here is what most people do. Okay, here's what most people do. Most people follow the rule that says this. You've got 10 years. You've got 10 years from when you take the money from the TSP to an inherited IRA. Once you inherit it, okay, you've got 10 years to have this inherited IRA empty. It's got to be empty, the money's got to come out, and the taxes have to be paid, okay? That's the rule. There's other rules you could follow, but that's the most popular in my experience, okay, most of the time, is you've got 10 years to take the money out. And so what that means is, let's say you get $500,000 from a parent, or your kid gets $500,000 from you, whatever it is, they move it to an inherited IRA, that $500,000, they don't pay taxes on it at all when they make this move. However, they've got 10 years now to take that $500,000 out, and they could take it out however they'd like. They could take it out in 10 payments once a year for 10 years. They could take it all out at the very end. They could do whatever they want, but when money comes out, any pre-tax money that comes out, they've got to pay the taxes then. Okay, so generally speaking, we want to spread those payments out, right? If you take a huge lump sum, if you take it all out at once, $500,000 added to your taxable income all in the same tax year? No, don't do that. Don't do that, right? Generally speaking, we want to spread it out. Spread it out so we have a smooth amount of income over time, okay? So again, here are the basic rules. You want to make sure your beneficiary is always up to date, always, 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 always. And even if your TSP is just going to go to your spouse, make sure your spouse is listed as the beneficiary. Make sure it's done, okay? Your spouse can keep the money in the TSP if they want to, or they can move to their own IRA. It doesn't have to be an inherited IRA. It's just their own IRA, okay? It's like their own money, basically. If a non-spouse gets it, they cannot stay in the TSP. They've got to go. It goes to an inherited IRA is what most people should do, right? And they've got about 10 years to take that money out and withdraw it and pay whatever taxes come with that. So that is a summary of how this all works. If you have any follow-up questions on this or similar topics, I'd be happy to address them. There's actually a link in the description below to submit questions, and we look at those questions as we get them, and we base our future content ideas on those questions. So they inspire what we do in the future. So if you want to have influence on what videos we make, there's a link in the description below to submit those questions. I hope that's helpful. Have an incredible rest of your day. I'll see you guys next time.